All right, good morning, everyone. It is 7:51 on the morning of February 9th, 2023, and this is my pre-market strategy session. Prior to today, I was looking at some price support levels, and actually, those price support levels that I was looking at, I think, are still relevant. However, I don't think that they are as relevant as the next CPI report. And So I went back and I was looking at my charts and I was like, where have we seen this price area before, where we are now, and looking at a couple of things. And so the title of today's video is Trading QQQ Chop into Valentine's Day CPI Report. And so I was looking back at price action. I was like, where have we seen, price action on the Qs before in this area? And essentially, the big thing that caught my eye was what could be considered an island top. Here, let me zoom into it a little bit here. So back here between the 27th of May and the 9th of June, we had this gap up, and then prices kind of hung out here in this price range for a little while. Let's see at the bottom of. Actually, I want to actually leave this last red candle off. So until the 8th of June, really, prices were bobbling around 314 to 302, right? I was like, well, okay, is there any other kind of similarity, occurring, developing right now in this sort of pattern, this formation that occurred before? And so here is the CPI report that came out on Monday the 13th. Monday the 13th. It's usually not a Monday, but okay. Monday the 13th, June 2022, the CPI report came out. And I've actually kind of forgotten what that CPI report said. I wonder if I still have that window open. Let me see here real quick. No, I don't have it open. Okay. Well, actually, as it turned out, I think that CPI report came in line or a little bit less than expected. I don't remember. But it wound up putting in this short-term sort of little support area right here that the market decided to try and run up again. So, and actually also the same number of days. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. 8 days of this formation prior to the CPI report. Interesting. There's 1, 2, 3, 4, 5, 6, 7, 8 days, but prior to the release of the CPI report back here, let me get this line out of the way. You can see there was this really nasty little gapping down bear move here in those 3 days before the report. Actually, while I'm at it, let's look at a percentage. Look at the top to bottom percentage on that move. That's an 11% move down. But basically, I think that's where we are right now until we get closer or to the day of the CPI report. In my opinion, I think that we're going to see prices trade. This is the Qs in between these areas. And actually, you know what? Let me bring back those other horizontal rays that I have. Yeah, I think that's pretty much our price range for, until February comes along. And so this morning we are opening up, and it could actually, it could be the opposite of what happened back here. We could have some insane run up. This is an insane run down over the period of 3 days. We could, have some insane run up over the period at the same time period. So let's see, 1, 2, 3, 1, 2, 3. That puts us on tomorrow. Tomorrow, if tomorrow is a really big, huge bullish day, I think that we'll probably see a pretty decent run, rather significant run to the upside, leading into the CPI report. Otherwise, I think it's just choppy. I think that until we get into the day of the CPI report, I think that things just kind of keep chopping around in that area. Let me turn this back to green. So I prefer green to red. Red reminds me too much of my childhood when I was getting my papers graded by a teacher. Okay, so yeah, I'm still waiting for a pullback. Essentially, really a buy the dip moment, and I'd love to see price. Come on now, come on. Oh, oops. I'd love to see price dip down into this area right here, sooner rather than later. There is still the smallest bit of a gap left, although the candles, you can see here the wicks of the candles do overlap. Technically speaking, until this 300.92 gets retested, there's still a gap in there. Now, it's a very small gap, and it's just kind of like the market doesn't always like to follow the rules, and it could leave that gap behind for a long time. Anyway, so for the next few days, I'll be using these levels. 309.62 on the upside is going to be, there's going to be one of two scenarios that goes on there. Let's go to the 10-minute for this. And that is that we'll bump our head against it and fail again, or we'll break through, retest, and move higher. So it's going to be smart to be just patient, right? What I'm really looking for is a move down to this 300.92 area, actually even to break through it a little bit, and then see it dribble back up and then start moving higher over the course of a few days. That would be really good spots to take a long trade, in my opinion. And I am willing to start buying as it crosses down below and gets about, I don't know, say halfway right here to the halfway mark. Let's see here. So just roughly speaking, like if we get down into like the 297, 298 area, I am willing to buy down there. And in small increments, probably 0.5% of my trading portfolio, or my trading account at a time for the next few days, or for as long as it's down here, in the anticipation that it moves up. So probably like I don't know, maybe take 6 options, see if I can average into 6 options down here in this area if it makes it down here for 2 months out, and see if I can get a nice big run. Probably if it's down below 300, I'll probably look for options with a strike of 300 2 months out, and just sort of manage my risk from there. See how things turn out. But yeah, basically, I'm bullish. I think that there's just a little bit of time until we see the next leg up. I'm waiting for a pullback for that to happen. I could get left behind. If this thing decides to start breaking up and breaking over this, I won't be in as big of a position for a break above this as I would be if I took time to average into a swing position down here in this price area. So the VIX is still kind of bobbling around this 19.12 low that it put in back here in August of 2022. It was 6 months ago, almost 6 months ago. Almost 6 months ago. Wow, time flies. 10-year, 2-year is still super inverted. If you've watched any of my videos, you know what I'm going to say about this, and that is that while the 10-2 portion of the yield curve is inverted, the risk markets, equity markets can stay bullish, can be bullish. There's quite a bit of a difference between what we're seeing now and what we saw back here before the dot-com bubble and before the housing bubble. And that is that the Q's put its top in over a year ago now. Let me get out of the marker. And so you can see back here in November of 2021, the top was in. In these cases, certainly in 2000, leading up to the 2001 dot-com bubble and leading up to the 2008 housing crash, the top wasn't in until a couple of months before the crash started to occur. The blue lines here indicate when the crash started, and the tops came in a couple months before the blue line, before the crash. So here in this example where we've got the inverted yield curve, the top may have been put in already over a year ago, you know? And so what that means to me is that once this yield curve starts to normalize again, we're looking at probably new lower lows on the Qs in the tech sector. But we'll see. I mean, I could be wrong. Just because it did in the past doesn't mean it'll happen in the future. I am expecting another leg down, though. Definitely when that 10-2 starts to normalize again. The dollar had a little bit of a run up here. I don't know what that is. Profit taking, sort of a short-term short squeeze. If this red candle here on the 1st of February kind of sucked in a whole bunch of bears, because a good way to trade momentum certainly is the break of a low will bring in more lower lows. And so I don't know, maybe at this point right here, I don't follow the dollar, the trades of the dollar. I don't follow, how many contracts, long and short, and what the ratio is and stuff like that on the dollar. It just looks to me like it's a little bit of a short squeeze that's happening, but the dollar is starting to roll over again here. Weaker dollar is better for equity markets than the strong dollar. So it looks like the dollar is going to start kind of its next leg down here. It's starting to roll over at the top and kind of curl over right there. And we'll see, what happens. But a weaker dollar is definitely better for the markets than a strong dollar. And then Bitcoin here. The levels on Bitcoin that I keep an eye on. This has been one heck of a run for Bitcoin here, and it's cleared over that 20,000 mark. The major support and resistance levels that I have is around 19,000, let's call it 600 roughly, and then 13,555, 13,355. Now, the way that I'm seeing things is, and we'll see how this turns out, is that by the time, actually, you know what? I think it's gone the opposite direction as what I was expecting. So probably, I was expecting Bitcoin to be down here in the 13,000s by this time. It could happen. Not looking too likely. But yeah, this neckline right here, crossing over the support area, that's where I was expecting Bitcoin to be, but it has definitely caught support here over the past few weeks. I'm not exactly sure what that's all about. It could be very forward-looking. The economic conditions actually aren't supposed to worsen in the second half of the year. In the second half of the year, things are supposed to be getting better. We're supposed to be going through the worst of the economic downturn in the first and second quarter of this year. Third and fourth quarter aren't looking exactly rosy, but they aren't looking as bad as what we're about to go through in the next, in the first 2 quarters of the year. So I don't know. We'll see. We'll see what happens. But if this thing, if this crossover right here actually plays out along the neckline right here, we might see an enormous down move in Bitcoin. I'm not predicting that, but it's possible, right? But also, there's been, I mean, a 50% move, I think it was. Let's go from right here to right here. 48.49% on Bitcoin here after it kind of broke up above this neckline, went down below it, flirted with it, dipped down again, and then just took off. I mean, that's one heck of a move. That's cryptocurrency for you. All right, everybody. Yeah, that's my strategy for the day. Actually, you know what? My strategy is I haven't actually covered. I am anticipating chop, similar to what we saw in this area over here. From the 27th of May to the 8th of June, I'm anticipating a few more days of that here. Of course, I'm going to be looking for big breaks in either direction. But for the time being, yeah, it's looking choppy to me. And so oversold conditions, I'm looking for longs. Overbought conditions, I'm looking for shorts. After CPI rolls through, we ought to get a pretty decent picture, a pretty decent idea of what happens going forward after that. All right, everybody, good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell. Thanks for tuning in, and I'll see you at tomorrow morning's strategy session. I am out.